The largest platform in decentralized finance, Aave, got hacked, at least indirectly. We saw $10 billion of outflows and $1 billion arrived in Spark. Spark is thus rallying. Does it make sense to still buy? Let's have a look at the on-chain data most people are not considering. Now, I've been in crypto since 2018, and on average, I outperformed buying and holding Bitcoin by more than 2% per month. That's then how that compounds over time. And that's then how that looks like when you also continuously invest in that portfolio. So I started a copy trading pool last year when Bitcoin lost 25%. That pool appreciated by 17%. This year we are up more than 10% while Bitcoin is down 10%. And so on this YouTube channel, I share the approaches and the data points that I look at in order to outperform. So let's have a look at Spark again. So Spark apparently has seen more than $1.3 billion of inflows from Aave. Here is the Spark total value locked. So that's on DeFi Llama. And the news are correct. It shot up from $3.8 billion to now $5 billion of TVL. While at the same time, the total value locked on Aave crashed. It went from 26 billion down to 14 billion. Now that's not the only thing that's going on. Because we see all of those inflows in the platform, centralized exchanges now also start listing the token. And token listings very often result in additional price appreciation. We've got a listing on Upbit now. Besides that, we also have a record in staked SPK now. So that's 500 million tokens. Is that a lot? Is that a little? Let's have a look at the circulating supply. That's currently at roughly 3 billion tokens. So 1 out of 6 tokens are getting staked. But when we look at the circulating supply of SPK, we can see that it tends to grow faster compared to the staking chart. So really, the staking isn't really that big of a deal. We should rather have a look at this here. This orange area, that's when the team is able to cash out. And that starts in June of this year. So in a bit over a month, we might see additional selling pressure in Spark. Now here's Spark in US dollars. This is our recent rally. The average price since launch is here, this dotted line. We are currently roughly 30% above that average, but I always like to look at relative valuations. So this is now Spark relative to the rest of the altcoin market. Now why do we want to look at relative valuations? It's because of correlation. So when Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well, and vice versa. When the market in general crashes, most altcoins tend to follow. If we look at relative valuations, we can see what's happening specifically for that altcoin. Is that altcoin right now underperforming or is it outperforming, and by how much? This is really the decision maker whether or not we should buy or sell an altcoin. We can see that we established a floor at the beginning of the year and that we had been at higher prices in the past. The potential upside is more than 100% from here. The relative price of Spark relative to the general crypto market is this dotted line over here. So we are much higher on that metric, 73% higher. There are some very encouraging data points though. Have a look at the market cap. Spark still has a very low market cap of only 134 million. Aave has a market cap of 1.4 billion, so more than 10x of Spark. Uniswap is 15 times larger than Spark. WLFI, so World Liberty Financial, the project launched by the Trump family, is 20 times larger than Spark. So the market cap is definitely not an issue. Let's have a look at the on-chain data. So there are 17,000 holders on the Ethereum chain. And what we see over here on the left side, that's the number of wallets with at least 20,000 SPK. So that's roughly $1,000 worth of the token. In the middle, it's $10,000 worth of the token. On the right, it's $100,000 worth of the token. We can see how the retail investors tended to reduce their exposure to Spark, either because they moved their tokens to the centralized exchanges with the listing, or because they're just taking advantage of the current rally and they're selling off. I think the second effect is likely larger. The whales are not really exiting, and this is encouraging because we want to see the whales being bullish. The whales tend to do better calls. Crypto is both a game of luck, but also of skill. And the longer the game is being played, the more the capital allocates towards the people that are skilled, right? It's just like with roulette. If you play roulette for long enough, then the casino will win. If you play crypto for long enough, then the skilled people will get most of the capital. So what the whales are doing is very, very important. And the whales are not selling into this rally. Let's check out the different kinds of markets. So we've got 477 million worth of trading volume on the spot market, and we've got 1.4 billion worth of trading volume on the perpetual futures market. So there's more trading volume on the perps. And the perp traders are currently getting wrecked. The funding rate is extremely negative. There are many people currently betting on falling prices. The short liquidations had been quite high, 4.8 million versus just 3 million in long liquidations. And the open interest is rising, but it's nowhere near to where it had historically been, at close to 200 million. So there's still a lot of potential upside. There's of course correlation between open interest, so the amounts of bets on the price, and the price itself. When there's more interest, when there's more bets, when there's more speculation, price goes up. When there's less speculation, the price goes down. And we are currently just starting to take off. The same is true for the trading volume. The trading volume starts to go up again. Now, how can we time this market? I've again run a backtest using Bitcoin Strategy Analytics. So that's a backtesting platform available to the premium members. We've got Spark over here, and we've got a backtest for the best simple moving average. That's now the best moving averages all the way up to the 200-day. Trading Spark based on moving averages on average tended to outperform just buying and holding, which is the line here in gray. The very best moving average is the one over here. It's the 17-day. So that's then how that looks like over time. We go long whenever we are above the moving average. We go short whenever we are below. Currently we are long. The 17-day SMA tends to outperform by quite a lot, right? Close to 400% APY versus minus 38%. That's without any leverage. So the 17-day SMA is probably the best to time a potential exit. We are in the middle of a rally, and that rally might continue for a while. And simply plotting the 17-day SMA against the price brings us a potentially good exit signal, as it did here on the 11th of August, where a similar price appreciation happened. It's important to find those exits because there's a lot of volatility. Spark can easily also go down by 80%. If you got some value out of this video, feel free to give it a like. It helps the channel grow. Feel free to also subscribe. I publish videos regularly. See you next time here on YouTube, or see you in Premium. The link to Premium pops up here on the screen. This is where you get access to my own trades. This is where you also get access to the backtesting tools. See you next time. Cheers.